Welcome to the Tax Sale Podcast, where tax sale investing is made easy. My name is Casey Dimon. I'm a tax sale veteran, tax sale expert, author of the Tax Sale Playbook, founder of the Tax Sale Academy, and I am your host right here on the Tax Sale Podcast. Thank you so much for joining me on today's podcast episode. As a reminder, this is a completely free podcast. I don't charge a membership or listening fee or anything like that, and it's brought to you through and because of the Tax Sale Academy. So if you are looking to learn more about investing in tax-defaulted real estate, make sure you check us out at taxsaleacademy.com. All right, I've got a good one for many of you folks today. I'm talking about tax sale investing as a side hustle. Can it be done? What are the best possible paths to take if it can be done? What should you expect? So, just to lay this out here right off the bat, I am not a pie-in-the-sky type person. I'm not going to tell you you can make $10 million by working 7 minutes every single week. Simply put, the more time you have to invest in this business or any other business, the better. In the end, like everything, it's a numbers game. The investor who can invest 70 hours a week into a business is going to make more money than the investor who can only invest 2 hours a week into a business. So if you're a part-time investor, be certain that you have the mindset correct when going into it. Is going to take time. You must be patient and you must be willing to be consistent. But can it be done? Absolutely. I have members inside the Tax Sale Academy. In fact, the majority of the members inside the Tax Sale Academy either started it off originally or are currently still part-time tax sale investors. They do it in their days off, their evenings, mornings, breaks, weekends, that kind of thing. It can absolutely be done. In fact, many of those same people are absolutely crushing it. And the truth is, whether you're part-time or you're full-time, you're going to have to go about it the same way. You're just going to have less time to dedicate to it. Let's go over a few specific tips that I have for the part-time investors. Number one, the first one is to stop and learn. Your time is valuable. While I'll never recommend it, a full-time investor can go out there and make lots and lots of mistakes very, very quickly, and they can leverage those mistakes to learn from. Again, that's not the correct path, but people do it. As a part-time investor, it might take you 9 or 10 times as long to make those same mistakes. A setback as a part-time investor puts you way behind, and you don't have time for that type of learning curve. So I highly recommend training. The lower the amount of time or the lower the amount of money you're starting with, the more I recommend it. The more you want to shorten that learning curve, the more I recommend it. Stop and learn. That's the first thing. The next one is to be realistic about the time investment you can make into the tax sale business. What can you actually set aside per week? You're going to need a minimum of a few hours every single week. Most people can make up this time by simply waking up a little bit earlier, going to bed a little later, skipping their favorite Netflix show, or whatever else. But you need to figure out exactly how much time you can set aside and then commit to it every single week. It's very, very easy to start off strong when you're excited, but you must stay disciplined with your time investment long term. Again, obviously, the more time you can invest, the better. But whatever the number is for you, stick to it. The next tip is to treat it like a business, even though it is only part-time. Don't get started by just dabbling here and there and working on your tax sale business kind of like whenever you feel like it. Stick to that hourly time commitment you have and operate it as if it's your full-time job. All your focus right there. You should not be researching properties, watching your favorite TV show, and cooking the kids' dinner all at the same time. You should be able to focus fully on it when you're doing it. If you can't commit to having that focus, this is not the business for you because you will make a bad mistake. The next tip is to focus on learning how to be efficient. I've been preaching this one for years, but it is such an amazing skill to have. I remember the first tax sale list that I researched. I spent nearly all day researching like 20 properties. Now I can research 20 tax sale lists in that same time period. There are strategies to doing this, but if you learn how to be efficient, you will leverage the limited time you do have, which will ultimately lead to the success that you desire much, much sooner. The next suggestion is to learn how to utilize the service of others. And this was hard for me originally since I'm a do-it-all-yourself type person for most things. But I quickly learned that in order to maximize my time, to maximize my profits, there would be times that I need to rely on other people. Maybe this is a quick phone call to the county to rely on their employee to answer a question for you instead of spending hours trying to find that same answer online. Maybe it's hiring a scout local to the property to do a drive-by for you. By using and sometimes even paying for the services of other people, it'll save you a lot of very valuable time, which is already at a premium for the part-time investors. The next suggestion revolves around online-only auctions. Many part-time investors might be limited to just online auctions due to the convenience of it, the savings when it comes to their time required. I did a podcast last week where I discussed convenience and how it kills profits. Obviously, that title is a little bit extreme, but if you're limited to online-only investments, just be aware of what you're getting into. Many of the most successful Academy members I have invest solely online, so it's definitely possible, but online investing will require a lot of patience and a lot of persistence. So if that's your only path, make sure you keep that in mind. Now, when it comes to in-person only auctions, be sure you are accounting for your travel expenses, for your time off work, and everything else that goes into. Obviously, if an auction is in-person only, you're going to have a much smaller audience, fewer bidders, lower competition, and assumingly, you'll be able to get much better deals, but that comes at a cost away from your primary job and, of course, travel expenses. So be sure to accurately factor all that in when you value your time spent at each auction. The next suggestion, be consistent, please. Again, it's so easy to get excited, to get started, and then that excitement begins to wane and your business begins to fizzle out. This happens all the time with full-time investors who are consistent for a day or two, then they get distracted and they put themselves out of business before they ever really even get started. And it is so very important that you are consistently learning, consistently researching properties, consistently going to auctions and everything else attached to this business. The ones who are most successful in this business are the ones who are the most consistent in this business. You show me somebody that has been successful for 20 or 30 years, I will show you somebody who is very consistent in their actions as a tax sale investor. The next suggestion is that this business, it's a numbers game. One property at one auction isn't going to do you much good. 50 auctions with 5,000 properties will probably do you a lot of good. It is very frustrating to hear from brand new investors who seem fed up with the tax sale business after one auction where they watched maybe 3 properties get sold. It's a real tough pill to swallow for many. But until you've been to lots of auctions and you've seen hundreds or thousands of properties sold, you have no right to be frustrated. As a part-time investor, this is going to take time. Keep that in mind. The last thing that I have to suggest for a part-time investor is to reinvest your profits. It is super easy to think of the tax sale investment business as a side project. Make a few bucks, go out and spoil yourself with a new car, a cruise, a trip somewhere, whatever you want to spend that money on as a reward for yourself because you didn't rely on that money in the first place. That is not the way to operate a tax sale business if you are looking for long-term success. It should not be approached as a vehicle for you to make spending cash initially. You should instead approach it as a way to grow your long-term sustainable wealth. Snowball your capital over and over again. By doing this, you're going to open yourself up to a lot of new opportunities. You're going to open your business up to a lot of opportunities and subsequently your income. And in the end, that spending cash, it's still going to be waiting for you, although it's going to be much more sizable. So there it is. There's a few suggestions, tips, and approaches on becoming a tax sale investor as a part-time deal or as a side hustle. It can absolutely be done, but you need to approach it realistically. And most importantly, you need to learn what you're doing before you get started. Listen, I truly hope this episode helps you out. If this episode or any of the episodes here on the Tax Sale Podcast have helped you out, please do me a huge favor and leave a positive review on whatever podcasting or video platform you're listening to us on or watching us on right now. Your reviews mean a lot to us when it comes to the algorithm, and they might even serve to pay it forward to somebody else who learns about this incredible business simply because you took the time to tap a 5-star review or leave a positive feedback comment. And as always, if we can be of any additional help, there are lots of links in today's show notes, including one to our most comprehensive step-by-step training at thetaxselacademy.com. Hey, take care and make it a successful day. We'll see you next time right here on the Tax Sell Podcast. Bye-bye.